Please put your phone on Do Not Disturb and look at the screen. Also, please close any other apps that are open. The news stories that talk about restoring freedom or fighting drugs in South America are just smokescreens that have been carefully put together. This story is meant for the 99% of people who still think that big geopolitical moves are all about ideas. You're here, though, because you know better. Every bomb dropped and every government overthrown in 2026 will be seen as a move on a global chessboard of resource securitization. That's why you're here. In particular, what happened in Caracas on January 3rd, 2026 wasn't just a military strike. It was the first shot in a global resource war where silver is the main target instead of oil. This is Markets in Context. My name is Kevin Huang. If you want to know what's really going on behind the news, click the subscribe button right now. You only have a short time to get ready for what's coming. Let's see what's really going on. Airstrikes hit the capital city of Caracas with great accuracy at 2 a.m. VET on January 3rd, 2026. This wasn't a shot to warn. People in the area said they heard low-flying planes and blasts near the La Carlota Air Base and the Fort Tiuna military complex, which is the nerve center of the Venezuelan Ministry of Defense. The Joint Special Operations Command, JSOC, carried out Operation Southern Spear, a high-risk attack meant to cut off heads. Elite units Delta Force and the 160th Special Operations Aviation Regiment broke into the presidential home, while electronic warfare in the area stopped the Venezuelan National Guard. President Nicolas Maduro and First Lady Celia Flores were caught and taken by helicopter to the USS Iwo Jima, an assault ship that can land and swim. As a legal cover, the U.S. government said this was like surgically removing a criminal regime. They used unsealed drug terrorism indictments to back this up. Now let's look at the time. This kinetic action is the most important military move by the United States in Latin America since the invasion of Panama in 1989. Why now? Why is this risk so high? Just-in-time supply lines have been replaced by might-as-right resource acquisition. This is where the answer lies in a global order that is breaking apart. Before you can understand the silver goal, you need to know what they said to get in. This bottleneck is heavy and rough. The fact that Venezuela has the world's biggest energy reserves is all the news these days. They will say, though, that years of bad management have already caused Venezuela's oil production to drop to about 900,000 barrels per day. Taking those barrels away shouldn't really hurt anything, right? However, paper is not real life. The truth is that crude is of that quality. Murray 16, a heavy sour crude oil made in Venezuela, is an absolute must for complicated refineries in the United States, Gulf Coast, and the state of Shandong in China. These huge industrial buildings that cost billions of dollars can't just switch to the Permian Basin's light, sweet shale oil. Without Murray 16, the diesel crack epidemic grows quickly, putting at risk the fuel that powers the world economy. Trump's statement that the U.S. is in the oil game and would temporarily take over Venezuela was a sign of a shift in strategy toward direct resource securitization. This is what experts are calling the Trump corollary to the Monroe Doctrine. It's a new aggressive interpretation that says the U.S. will take a resource that is important to U.S. national security that is being mismanaged by an enemy government. But this is where the story about energy falls apart and the silver truth starts. Operation Southern Spear did not happen by itself. The silver market was already going through a major supply-side crisis, and this made things even worse. The People's Republic of China set off a silent bomb in the global supply chain by making it very hard to ship silver, just 48 hours before the first bombs went off in Caracas on January 1st, 2026. When the China shock and the Venezuela shock happen at the same time, they completely change how valuable metals are priced. Silver was pushed to the back of the line by gold for a long time. It was bought and sold like a commodity or secondhand possession. But in the first few days of 2026, silver has broken free from its historical link to gold. It is now being traded as a key strategic asset that is needed for both the success of the industry and the economy. The short-term military goals in Caracas seem to have been met with great skill, but the effects on the economy are just now starting to be felt. It was planned for things to get worse to this point. During 2025, a series of events raised the temperature of world politics, but the market decided to ignore them. When the Trump administration took office again after the disputed 2024 elections, it marked a shift from international containment to active encirclement. By November 2025, the public understood that sending the USS Gerald R. Ford aircraft carrier strike group and F-35 stealth fighters to the Caribbean was part of a plan to fight drugs and catch the Tren de Aragua criminal group. However, the market sent a clear message. Notifications of matter, NOTMs, were sent out by the FAA for Venezuelan airspace, and oil tankers were told to be blocked by the Navy, which stopped all exports. The last part of the resource blocking plan was the strike on January 3rd. The U.S. didn't just go after oil when it got rid of Maduro's government. They were after the Arco Minero del Orinoco, an area of 112 square kilometers that was full of silver, gold, gems, and coltan. In the past, this area had a state-run black market where silver and gold were illegally sent to Turkey and the UAE to get around sanctions. The U.S. strike broke these defense networks, which immediately cut off supplies and stopped the flow of illegal metal to black markets around the world. When the world's market started on Monday, January 5th, 2026, there was a level of volatility that had never been seen before in modern times. But it was the spreads that showed the real stress. Brent crude prices went up to a range of $62 to $65. Even more important, silver prices went through a gamma squeeze in late December because people were expecting China to ban silver. They then soared toward $80 an ounce. You need to know how this move makes people feel. A lot of the time, geopolitical situations cause a rush to buy commodities. Sierra investors don't look for more paper contracts when they attack a sovereign country and take over its government. They are afraid of partner risk. They are afraid that the banking system will be turned into a weapon. The crisis in Venezuela, which happened right after China banned exports, has set off a double-engine event where both industry and monetary demand are on fire at the same time. In Venezuela, the currency system fell apart instantly and badly. Soberano, the believer, has reached a point of no return. This is the only market that counts right now, the black market. Within hours of the strike, the exchange rate gapped to 560 VEs USD. Since Venezuela's central bank stopped working, prices have gone back to being based on speculation and trade. This is where the silver survival value comes into play. On the streets of Caracas, costs for everyday things like bread and gas are only given in US dollars or grams of silver flakes. There is a problem in Venezuela, but there is also a problem with empire risk that is being priced into all important currencies right now. The BRICS Plus bloc of non-aligned nations is watching as a sovereign country and its resources are taken over by force. And they're all agreed on one thing. If the U.S. can take Venezuela's money and government by force, then nothing kept in dollars is really safe. This is making a trend that was already going faster. Central banks and big investors are not using fiat money at all and are instead investing in hard assets. Silver is holding up better than gold as the war premium fights the industrial floor. As the market opened on Monday, gold hit new all-time highs above $4,145 an ounce. This was due to the belief that the U.S. would pay for the war by taking on a lot more debt. However, the big companies are freaking out over silver. You don't have to worry about the debasement trade if you make solar screens or electric cars. There is a military blockade in Venezuela that is stopping metal from leaving China. You care about this metal. The U.S.'s involvement depends on the resistance taking over and making a friendly government. There are also plans to privatize a lot of the mining industry. It will take years for them to bring in Western majors and make extraction a career so that the criminal fiefdoms in the mining arc can be broken up. For the time being, Venezuela's silver industry is not working. This makes a structural gap that the surviving mines around the world can't fill since they are already having a hard time with falling ore grades and a lack of new investment. There is going to be a shock, turnaround, and breakout phase. Silver is going to test its all-time highs because of fear of supply from the east and fear of war from the south. This isn't a practice. This is how silver is now valued as a sign of world instability and industrial need. The resource war isn't just an idea in a white paper anymore. In the Caribbean, things are moving quickly. You need to look at the calendar to understand why the resource war has gone from being an idea in the boardroom to a real-life event. The eruption that people could see was the airstrikes on Fortuna, but the real seismic change happened 48 hours earlier on January 1st, 2026. Yesterday, the People's Republic of China set off a silent bomb in the global supply chain. That's why the U.S. military is now guarding the streets of Caracas. The China shock wasn't a military move. It was a legal decapitation that left the Western industrial complex with nothing to do. Analysts say that the People's Republic of China put in place what they call a draconian export licensing system for silver on the first morning of 2026. The system was made to be a geopolitical filter and was run by the Ministry of Commerce, MOFCOM. With these new rules, silver can only be exported by state-approved companies that can make more than 80 tons of silver and have bank lines of more than $30 million. It's not just a tax or a small problem, it's a soft ban that puts a geopolitical barrier between the world market and about 121 million ounces of annual supply. You need to understand that China is not just another supplier. They process more silver than any other company in the world and supply most of the silver paste that is used in photovoltaic solar panels. Beijing isn't just trying to raise prices by making it harder for these goods to leave the country. They are making a smart move to get the resources they need to make what they call the Green Leap Forward, which is their huge goals for making solar panels and electric cars. This was the final response to the U.S. ban on semiconductors. The price change let everyone know that silver is more than just a metal for jewelry or investment coins. The status of this mineral has been changed to strategic critical. This is where the China shock and the Venezuela shock meet, making the market very unstable. It was very important for the Western Hemisphere to look at its own stocks very quickly after MOFCOM shut down 121 million ounces of supply. The U.S. saw that it could no longer depend on a steady run of refined silver from the East to make up for its own budget shortfalls. In any way possible, it had to get the Western Hemisphere's biggest untapped riches. This is what Operation Southern Spear was really about. Capturing Maduro wasn't just a way to end a drug state. Making sure that the 112,000 square kilometer Orinoco mining arc, which is full of gold, diamonds, and important silver, stayed within the U.S.'s sphere of influence was important. The Eurasian bloc's response shows that both Beijing and Moscow quickly saw through the U.S. Cohen democracy story. Moscow didn't hold back when it called the JSOC operation an act of war and kidnapping. Beijing, which owes billions of dollars to Venezuela and has big investments in the Orinoco mining arc, said that the U.S. government was acting like a cowboy and was bullying other countries. For Beijing, the strike was a direct danger to their own safety when it came to energy and resources. It proved what they were most afraid of, which was that U.S. foreign policy has changed from economic control to kinetic resource denial. This change has completely changed how silver is priced. In the past, silver has been tied to gold and moved in a steady relationship. But in these first few days of 2026, we are seeing a basic decoupling. Silver is now traded as a key strategic object that is needed to keep industries running. It is thought that the U.S. will print trillions of dollars to pay for this new age of intervention, which is why gold is going up. Silver, on the other hand, is going up because there is a physical vacuum. Look at how the price has changed. Early in December 2025, silver was selling around $56. This was because most people thought the Fed would cut rates, and the solar industry was naturally buying silver. As the U.S. naval blockade of Venezuela got tougher and reports of a China export ban spread in late December, the price went through a gamma squeeze that made it all the way to an all-time high of $84.01 on December 29th. After a short drop on January 1st, while traders thought about how MOFCON would work, the Venezuelan strike on January 3rd sent prices back down to the $75 to $78 area. As of the start of the first full week of January 2026, we are in the breakout phase. This is what I call a double engine event, a rare occurrence in which both industry demand and monetary demand fire at the same time. On one side are the big businesses that are freaking out. When they see the bans from China and Venezuela, they know that their just-in-time supply lines have been cut off. On the other hand, investors who are scared of the growing resource war between the U.S. and the Eurasian group are fleeing to safe havens. You need to know about the factory floor that this price is based on right now. Silver is being used up at a record rate, while gold is mostly kept in vaults as a source of value. As a result of China's green leap forward and the West's energy transition, silver and solar panels are now necessary. It is needed for technology to work. You can make a price floor that is very hard to change by adding a war premium on top of this industrial floor. The structural deficit caused by China's export controls will always be a part of the market, even if the immediate fear of a bigger war in the Caribbean goes away. The U.S.'s involvement in Venezuela has made the silver market more like a bond market. The U.S. is trying to bring the country's mineral wealth into a Western-aligned system by getting rid of an enemy government that was using the resources to fund a black market. But the Orinoco mining arc will not become a skilled mining area overnight. The mining arc was split into fiefdoms run by the military and crime groups like the ELN in Trinidad and Tobago while Maduro was in charge. To get metal, these groups used destructive mining methods that used a lot of mercury. The metal was then shipped to Turkey and the UAE to get around sanctions. These illegal security networks have been broken up by the U.S. strike. In the short run, though, it has also stopped the supply. Smugglers have gone underground because they are afraid of U.S. enforcement assets. As a result, there is no longer any illegal silver moving to black markets around the world. This temporarily drains the world's stock of silver that isn't sold on the market, which makes the pressure on refined metal even stronger. We are in a state of commodity upheaval right now. The days when you could look at the spot price on a screen and know that was the price you would pay for metal are over. This is already true in Venezuela. On the NYMEX and COMEX, traders deal with paper contracts. In Caracas, traders deal with survival values. It took just one day for the Bolivar to drop from 300 VES to 560 VES per dollar, which means that silver has become the main currency used for trade. When things are like this, physical silver moves at a huge fear premium. If the spot price around the world is 75, an ounce could be worth $100 in Caracas, which is in a war zone, for food or fuel. This shows how useful silver is as a safe, undetectable way to store money that can help people stay alive when the banks fail. In a strange way, we also see a hardship discount, where families who are really struggling sell their silver jewelry for half of what it's worth just to get calories from people who are willing to pay cash. This difference between the price on the screen and the price on the ground is a message to investors around the world. A run-on-the-bank event is testing the technical framework of the silver market right now. People who are bound by contracts are more likely to wait for actual delivery during geopolitical crises than to back out of their deals. This is because they are afraid of counterparty risk and the financial system itself being used as a weapon. The market was already badly balanced before this happened. As of late 2025, there were 356 times as many paper silver futures contracts on the COMEX as there were registered actual silver inventory. That means that for every ounce of silver that can be delivered, there are 356 claims on that same ounce in paper form. This math has been looked at by the market because of the situation in Venezuela. Since 2020, COMEX inventories have dropped by 70%. The sudden rise in supply demands has met a stockpile that is almost empty, which is causing the wild price swings we are seeing. This is a classic short squeeze that is not caused by retail traders, but by geopolitical necessity. Investors are now putting all of their money into hard assets instead of fiat cash. They are realizing this as they watch the U.S. military take over the government and resources of a sovereign country. There is an empire risk. When the rules of the game can change in an instant and a country's energy and mineral reserves can be taken over by force or turned over to the government, then nothing kept in a dollar-based financial system is really safe. This makes it more likely for central banks, especially those in the BRICS Plus group, to buy gold and silver in real form and store it in their own vaults. As a safety measure against a world where trust has been replaced by physical force, the Caracas, they are going into non-sovereign bearer assets. Kinetic has shown that the fight for resources is what makes a 21st century geopolitical environment unique. The China export ban and Operation Southern Spear have caused both a regulatory supply shock and a global demand shock in the silver market at the same time. This has changed the value of silver forever as a measure of how unstable the world is and how long industries can stay alive. The market is no longer in a normal bull market. Today, bombs are being dropped in the present and atoms are being used to power the future. This is the start of a silver supercycle. If you want to really understand how big the pressure cooker that just blew up was, you have to look past the news stories about special forces and airstrikes and into the COMEX futures market, which is the dark mechanical heart of the global financial system. The price of silver is not just going up right now. The paper silver market is breaking apart as a whole. Trading digital contracts, which offer to deliver metal at a later date, has set the price of silver for decades. But as the smoke rises over Caracas, People around the world are becoming aware of a scary numeric fact that the establishment has been trying to hide for years. That was the end of the COMEX's structural imbalance. By late 2025, the ratio of paper silver to registered real inventory had blown out to an unbelievable 356 to 1. Think about that number. Take a moment to understand. For every ounce of silver that is ready to be sent out from a licensed vault, there are 356 digital claims on that same ounce. It is possible to keep this hallucination going during times of peace and stable supply lines by rolling over contracts and making cash settlements. But as soon as you use a shock reversal, like in Operation Southern Spear, the attitude changes right away. When there are big geopolitical problems like this, there is what the commodity world calls a run on the bank. People who invest money, sovereign wealth funds, and industrial makers need to stop trying to make money on a screen and start asking for the metal itself. In a world where kinetic force is changing the rules of the game, they are standing for actual delivery because they no longer trust the other party to keep the deal. There was already a lot of empty space in the COMEX system before this run. Since 2020, the amount of actual silver stored in registered vaults has dropped by 70%. We're not talking about a short-term drop in supply. There has been a steady loss of industry output for many years, leaving the vaults almost empty. The sudden rise in transport requests, which was caused by the instability of global logistics and the weakening of the rule of law, filled a need. And this is a standard short squeeze, but on a much bigger scale than the 2021 shopping frenzy. This is a short squeeze caused by the need for life among the world's biggest companies. The breakout's technical structure is one of a kind because it breaks the standard correlations that traders have used for generations. In the past, silver and gold prices have gone down when the US dollar gets stronger. This is called the dollar wrecking ball. During the Russia-Ukraine situation in 2022, this was very clear. Silver prices rose briefly before being crushed by a rising dollar. But 2026 is not like that. Silver is going up at the same time as the dollar right now. This is a rare and scary sign. Inflation and interest rates are no longer the only things that scare people in the market. As a weapon, the banking system itself is being used. Empire risk isn't just a crazy idea anymore when investors see the U.S. go from economic penalties to taking over the government and resources of a sovereign nation with force. Any asset backed by fiat money, even the dollar, is open to sudden policy changes because of this fact. This is the reason why there is a huge rush to hard assets that are not controlled by regular banks. Investors are moving away from digital promises and toward non-sovereign bearer assets. They want to have the real bar because there is no counterparty risk with it. Why did gold hit all-time highs? Because of this change in behavior, it crossed $4,140 an ounce when markets opened again on Monday after the strike. The debasement trade is going strong because the market thinks the U.S. will use huge debt growth to pay for its occupation of Venezuela and the rebuilding that will follow. This will make the dollar even less valuable. Silver, on the other hand, is really doing better. Gold goes up when people are afraid of debt, and silver goes up when people are afraid of not having enough silver. In 1980, the Hunt brothers manipulated the market by cornering it with leverage. The 2026 silver spike, on the other hand, is based on a basic fact in the industrial world. There is a real lack. It is being caused by the East's wild industrial consumption, mostly China's green leap forward, and the sudden political lockup of resources in the Western Hemisphere in Venezuela. This breaking away from gold is the most important change in the precious metals industry in our lives. From a precious metal to a vital technology metal, silver is being changed. It is the atom that the modern world can't live without. Without silver, you can't make a solar panel that works well, an electric car powertrain, or high-tech military electronics. You can't use something else. The MOFCOM export license system was put in place by China on January 1st. This made silver a controlled strategic material, similar to rare earth elements or advanced semiconductors. The current blast was set off by this move 48 hours before the Caracas strike. It took away the safety valve of Chinese refined supply from the world market. The U.S. Navy is now blocking Venezuelan ports, and the JSOC team is keeping the ground safe. The war premium is now fighting on the factory floor. When people talk about the industrial floor, they mean that the demand for silver from green energy is necessary even if the fighting in South America stopped tomorrow. It is a necessary part of how the world economy works. Because of this dual demand structure warfare on top of economic necessity, silver prices are much less likely to drop than gold prices. In the past, a peace deal might have caused silver prices to drop back to earth. Every time the cycle in 2026 goes down, a lot of companies will likely buy because they are afraid their production lines will stop working. The empire risk factor is also changing how the central banks of the world act. Non-aligned countries, especially those in the BRICS Plus bloc, are very wary of what the U.S. is doing in Caracas. From their point of view, no sovereign asset held in a dollar-based system is truly safe if the U.S. government can say that the leaders of a sovereign country are criminal and then take its energy and mineral reserves. This speeds up the return of real metal, a trend that was already picking up speed. Gold and silver are no longer just kept in vaults in London or New York by central banks. They're taking it back to their own countries, which reduces the amount of physical metal that can be bought and sold in Western markets. At this point, the structure of the commodities is no longer stable. The spot price of $75 or $80 that you see on your computer is becoming less and less important. The price is just words for a market that is running out of real gold. Silver is starting to be seen by institutional buyers as an asset that is not backed by a sovereign government. Insurance against the rules of the world's financial system being changed by a tweet or a tactical strike in an instant. The silver market is like a game of musical chairs, where 355 people are about to find out there is no chair for them. This is because the COMEX have a 356-to-1 leverage ratio, and actual inventories have dropped by 70%. The situation between Russia and Ukraine in 2022 is a good example to use here. The shock in 2022 was mostly about food and energy. Silver moved because it was a safe haven, but in the end, it was tied to the bigger picture. Silver's the shock in 2026. In the middle of the fight is the metal. The United States is trying to fix a long-term resource deficit by taking over Venezuela. In doing so, it is essentially nationalizing a portion of the world's silver supply to protect its own military and industrial survival in the face of China's export ban. But by doing that, they broke the trust that the world's trade markets are based on. When we look at the charts, we can see that there has been a gamma squeeze since the end of December. This is because people were expecting China to stop the signal and the U.S. Navy was building up. The price reached an all-time high of $84.01 on December 29th. There was a short drop on January 1st as the market tried to figure out how MOEFCON worked. But the strike on January 3rd was a shocking turn of events. It let the market know that this wasn't just a fight over rules, it was a war over resources. The price is now broken out into a new range where $80 is no longer the highest point, but the lowest point. The war premium is now built into the price of every gram of metal. In a world where trust is broken and resources are quickly taken, tangible goods are the only safe place to be. People are starting to see COMEX paper contracts for what they really are, digital ghosts of an old age. The real action is taking place in the streets of Caracas and in the vaults that central banks are emptying. Silver has already returned to its original role as a main form of payment. The math behind the 356-to-1 ratio is finally being pushed to match up with the vault's physical state. This has caused the world's most undervalued strategic asset to be repriced vertically. The time of cheap metal that was hidden behind paper is over. The rules of the game have been written in the smoke of the Caracas kinetic. This is the age of the metal supercycle. The real story of the silver supercycle is being told in the streets of Caracas, while the world's financial markets change their digital files and algorithms in response to the flashing red and green numbers on the COMEX. What happens when the currency system surface is worn away by kinetic force? That's how you can figure out where the price of silver is going. Right now in Venezuela, silver has changed in a very clear way. It's no longer a good or a financial risk. It has returned to its original basic role as the main way to trade. When the power goes out, banks freeze, and the local currency hits final velocity collapse. This is the only thing that can be done. It's over for the Bolivar Soberano. The stated rate on January 2nd, 2026 was about 300 VES to the dollar.